ever felt the moment you save up enough money for a down payment on a house, the price seems to jump out of reach again? If you've been wondering why it's been nearly impossible to become a homeowner right now in 2025, you're not alone. Stick around because I'm going to reveal the exact reason behind this never-ending surge in housing costs. Here's the short answer. Housing prices have exploded since the pandemic, driven by record low interest rates at first, and then skyrocketing demand. Those prices have started dropping, but not enough to make them affordable again. But that's just the tip of the iceberg. Over the next few minutes, we'll piece together what really happened using brand new data from multiple sources like Business Insider, the New York Post, and Fortune magazine. I'll show you why it's going to become a challenge to buy a house until a few puzzle pieces fall into place. At which point the stage will be set for you to finally stop renting and buy your very own home. I, for one, am very excited for this because me and my fiance have been stuck renting an apartment for the last few years, just waiting for a shift in the market that just hasn't come yet. We're running out of space fast, and as much as I love her, being on top of each other 24/7 isn't as glamorous as it sounds. But I finally figured out when the right time to buy will be, and if you missed the last buying opportunity back in 2020, you are not gonna wanna miss this next one. Hey guys, my name is Andy Coleman. I'm one of the top real estate agents in the world, having closed over 800 deals in the last 5 years. I just spent the last 50 hours researching what's gonna happen to the housing market in the coming years. So I hope you guys are ready for what I found. Okay, let's dive in. First off, let's revisit the height of the pandemic, when the housing market turned into a feeding frenzy. In 2020 and 2021, mortgage interest rates hit historic lows, dipping near or below 3%. Suddenly, people could borrow more money on their same income. This caused a spike in demand. Buyers rushed into the market armed with cheap financing. According to Wall Street's analysis of mortgage lending employment, lenders were hiring like crazy during these years to process that wave of new loans. Refinancings and purchases were happening left and right. But fast forward to late 2021 and 2022, the Federal Reserve slammed on the brakes, hiking interest rates a record 11 times to combat inflation. Mortgage rates started climbing higher and higher. By mid-2022, mortgage lending employment tanked because loan applications fell off a cliff at a rate nearly doubled from their pandemic lows. Demand for housing cooled, but prices stayed up for a while, stuck at record high levels. Now you may be wondering, if fewer people can afford to buy, shouldn't prices drop faster? That's our next big question. According to a Newsweek article discussing whether the US housing market is mirroring the 2008 bubble, there are crucial differences this time around. In 2008, we had an overabundance of risky subprime loans and a massive oversupply. Builders kept building even though demand was softening. Eventually, the bubble burst spectacularly. Today, however, the situation is much different. Housing supply is tight, but builders haven't been constructing new homes at the same pace we saw before the 2008 crash. Homeowners that are locked in at low mortgage rates are reluctant to sell because if they sell now, they're gonna have to buy another property at a much higher interest rate. So they're hanging on to their homes, further restricting the inventory. As a result, prices have only started to come down slightly, even though mortgage rates are significantly higher. Low inventory continues propping up prices. There aren't enough homes on the market to create a meaningful drop. But, and here's a key point, that we are seeing an overall downward trend. Business Insider recently cited data showing that while prices have come down, they remain out of reach for many first-time buyers. Beyond just the purchase price and mortgage interest rates, there's another factor hammering prospective homeowners: cost of ownership. According to a recent piece in the New York Post, many homeowners now pay more for insurance and taxes than they do the mortgage itself. Insurance premiums for homes have surged in certain regions, especially in areas prone to natural disasters. Property taxes have ballooned in value as local governments reassess property worth at these sky-high prices. So if you do manage to scrape together your down payment and finance a mortgage at today's interest rates, maybe let's say 7%, you still might find your monthly costs overwhelming due to taxes and insurance. Combine that with higher rates, higher taxes, and higher insurance, it's no wonder so many potential buyers are now on the sidelines. We see the tension. We want to buy, but the moment we do, the real monthly cost could drown us. Remember how we said earlier the supply is tight, which props up prices? Well, let's dive deeper into when we might actually see more meaningful prices decline. According to Narada's real estate analysis on whether the housing market is on the brink of a crash or a boom in 2025, the current environment is very unstable. Their data suggests many markets could see double-digit price reductions if mortgage rates climb above 8%. In some overheated areas, prices have already started to correct by 5 or 10%, sometimes higher, like, as an example, Austin, Texas, which is very rare, but they are down around 20% since the peak in June of 2022. But the big question still remains. Will we see another 20 to 30% drop in nationwide pricing? Here's my theory. Backed up by the pieces of data from these sources, mortgage rates will likely keep inching higher into 2025 because the Fed wants to keep inflation in check. According to a Fortune piece, there's even a 40% chance we'll see another rate hike in 2025 to rein in inflation. As rates climb, inventory could stay low for existing homes. Nobody wants to lose their sweet 3% mortgage to rebuy at 8% or higher. Prices will drop as the economy continues to adjust, but not drastically right away because of the shortage of homes on the market. It'll be a slow burn. So if you can't afford to buy, you might be beating yourself up or blaming yourself. But the truth is, there are system-wide forces at play here that are totally out of your control. For example, high mortgage rates. When mortgage rates hovered around 3%, a $400,000 mortgage would cost you about $1,650 per month. At 7%, that same mortgage runs over $2,600 per month. And that's before property tax and insurance. Now, let's talk about wage growth versus home price growth. The rise in salaries has simply not kept pace with the steep climb in home prices. Even if you're earning more now, it might not be enough to offset the doubling of mortgage interest rates. And then there's economic uncertainty. Many people are hesitant to jump in now, afraid that if they buy at the top, they might become upside down on their mortgage if prices start to tumble, which I think they actually will. With these obstacles, it's rational for many would-be buyers to remain on the sidelines. This is why it feels impossible to buy a house right now. The combination of high interest rates, high prices, and high monthly expenses is an unholy trinity that's freezing people out of this market. Now, let's circle back to the big question. When will it be possible to buy again without risking your future and your sanity? Here's my 3-year roadmap. In 2025, expect mortgage rates to remain elevated. Some analysts are even predicting hovering in the 7 to 8% range. Inventory likely remains constrained because current homeowners don't want to give up their low rates. Prices may continue their slow drop, but it's not going to be enough to suddenly make everything affordable again or cause a crash. In 2026, prices might have corrected more substantially by now, potentially another 10 to 20% in some overheated markets, especially if the Fed continues quantitative tightening. Many would-be sellers would finally begin to give in if economic uncertainty drags on for a little bit too long. Now, here's where it gets juicy. In 2027, according to several economists cited in the Fortune article, the Fed could finally pivot away from the rate hikes to rate reductions around this time, especially if inflation is under control. These lower rates make monthly mortgage payments more affordable. Combined with a potential 20 to 30% drop in home values from their pandemic peaks, this could be the sweet spot for many buyers. So why does it feel impossible to buy a house right now in 2025? Because in many ways, it actually is. The math just doesn't work out for most people with higher interest rates, slowed wage growth, and surging property taxes and insurance. The market is in kind of a holding pattern. Buyers are holding off, sellers are holding on. It's typically cheaper to rent the same equivalent house right now for up to $1,500 less per month in some states. But here's the silver lining. As mortgage rates peak and the economy stabilizes, prices will correct. This is slowly happening, and the data points to 2027 as a particularly compelling window when rates might finally ease. If you're feeling frustrated that you cannot afford a house in this environment, do not lose hope. In the meantime, my advice is to build your savings. Remember, if you want to avoid PMI insurance, which could be an extra few $100 a month, you need 20% down. And to get a lower interest rate, you need to improve your credit score. And most importantly, stay up to date on the market. Because when the scales finally tip back in the favor of the buyer, and they will, you will finally be able to afford to buy a home. But you're not gonna wanna miss this tiny window again if you missed it a few years ago. So I'll keep you guys up to date every step of the way. Hit that subscribe button so you don't forget to watch any of my future updates and my future videos.